Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So as we go into a new week, last week iron ore prices, they broke $200 a ton for the first time ever. Palladium prices broke above $3,000 per ounce to hit all-time record highs. Copper prices, they surpassed their all-time high and have now doubled from the lows seen a year ago, and the bullish momentum also spilled over into the precious metals, with gold prices rising for a second straight week in a row to settle at its highest since February, while silver prices, they closed this week trading near 3-month highs. Commodity prices, they've firmly now positioned themselves as one of the best performing asset classes of 2021, with a total of 27 commodities ranging from the metals, energies to softs, racking up double-digit to triple-digit gains so far this year. Many commodities have already exceeded the highs of the previous super cycle during the 2000s, and this is just the beginning. Interestingly, the best performing commodity so far in 2021 is lumber. Lumber prices have quadrupled this year and are setting new record highs almost daily. Lumber prices, they've climbed 67% in April. They're currently up over 500% from their 2020 lows, and there are plenty of reasons why commodities are on the move. But the key driver is rising inflation, which has spurred significant demand for assets with inflation hedging capabilities. This rise in demand for commodities, it's been supercharged by a vaccine-led economic recovery fueled by massive amounts of global stimulus into green energy and infrastructure projects, all against the backdrop of tightening supply across many high-in-demand commodities. All these factors combined add further fuel to the fire to the booming rally across the commodity markets, which shows no signs of slowing anytime soon. Whichever way you look at it, the case for commodities in a well-diversified portfolio has never been more obvious than it is right now. Now, looking ahead to next week, all eyes will be on the Federal Reserve as the ongoing debate over surging inflation begins to heat up and test the Fed's commitment to maintaining its ultra-accommodative monetary policies. Last week, we saw US consumer inflation soar 4.2% in April. That's the most significant increase since September of 2008. Meanwhile, US producer prices rose 6.2% for the year. That's their biggest increase ever on record. Traders have now shifted their attention to next week's minutes from the Federal Reserve's latest policy meeting for clues on the market's next big move, as well as comments from a host of Fed speakers that are scheduled to speak next week. So far this year, the Fed has maintained their stance to allow inflation to run hotter than its traditional 2% goal, stating that any price acceleration will be temporary. However, traders remain unconvinced. They believe surging inflation is beginning to snowball into a problem that the Fed can no longer control. And this in turn, it's adding further fuel to the commodities supercycle. Extraordinary times, they create extraordinary opportunities. And right now, as traders, we're living in some of the most rewarding times ever in history. This is an opportunity right now to supercharge your wealth and really maximize the super cycle that we're in at the moment. We're almost halfway through the year and nearly 6 months into a new commodity super cycle, which has also supercharged our gains so far in 2021. We're consistently banking close to 10,000 points per month, which we've transparently documented through our weekly videos and gold and silver asset of the day. So essentially, if you're trading at one lot, that's $100,000 of profit, and if you're trading at 10 lots, that's $1 million of profit that you're able to capitalize on alongside ourselves and our members at the Gold and Silver Club. The majority of our clients at the Gold and Silver Club have already achieved anywhere between 6 to 7 figures so far this year, and we still have another 6 months to go. In fact, here are just some of the testimonials which have been flooding in from our clients, their success stories over the past few weeks. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. First of all, let's just move over to the metals here. As we've continued to update you during Silver Asset of the Day, we have continued to build into our silver position to the point now actually we're heading into next week. We have built over the last 2 months here 10 positions on silver. So we're fully stacked into this market. As we've highlighted to you many times previously on Silver Asset of the Day, it was really a gift between 24 to 25 US dollars per ounce at the end of March, beginning of April, to buy into these sell-offs where many traders out there were panic selling out the market. They were looking for much lower prices. We took that as a massive opportunity to build further positions on silver. We protected those lower trades, and we've continued to stack here and build our core position in silver over the last month. There were even more opportunities again last week on the dips, and the prior week to that. We've continued to talk you through this, that you want to be buying into dips. Any weakness right now on the metals, particularly silver, we are buying and accumulating into these sell-offs at the moment to establish a larger core position, which we have running at the moment on silver. So you can see on Friday, we've closed at $27.40 per ounce. We're now fully loaded with our overall position on silver. Our expectation is, certainly as we progress throughout this month and we go into the summer here as well, that the metals, including industrial metals, will continue to outperform here, and particularly metals which are utilized in infrastructure and also green energy policies, and of course electric vehicles such as silver, which will benefit from all of this additional demand. Then if we move it over to copper, our copper position has moved extremely well here over the last month. One of our profit targets has already been realized. We continue to keep our other position long here on copper. So copper, as you know, is broken out to all-time highs here. Copper prices, they've doubled in the last year. We continue to stay long on copper. I would really see any big sell-offs on copper as an opportunity and a gift to build further positions here. We continue to remain long this market. Typically the month of May heading into June is supportive for copper prices. Then moving over to gold. So as you know, we continue to hold onto our gold position. We talked you through this in a lot of detail, the opportunity that you had to build positions between 1680 to 1700. That was right at the beginning of the month, so you can go back and watch those videos if you missed them, right at the end of March, beginning of April, on Gold Asset of the Day, where we talked you through this opportunity, as many were looking at much lower prices for gold, expecting gold to hit to 1650 or 1600. However, we were buying as everyone was panicking, and we were building our position, getting in really early, right, which is very important. We've been building those positions very early on so that we're now in a position where we can just continue to manage those trades, and we still remain with our gold position long as we go into next week. You can see here where we've closed near to limit up, so we're essentially closing at 2.5 month highs here on gold. It looks very strong into Friday's close. What we want to observe on gold next week is whether we're going to get a retest back towards the highs that we saw in January here, particularly at the end of January. We're likely to get some consolidation around those levels. There's a lot of resistance that we saw going back to December and January around the current levels, which takes us back towards the 3-month highs on gold. As I mentioned, we continue to hold onto our long position here. We've been very early into this trade, and many traders out there, they've tended to buy in much later into the move, or they've missed the entire trade over the last month and a half here, which has been very lucrative to capitalize on this market. And then on platinum, we continue to hold 2 positions on this market, where we were buying on the corrections that we got over the first quarter. Platinum still continues to hold higher highs and higher lows at the moment. What we want to see on platinum going into next week is whether we can get any additional acceleration to the upside, and whether we can essentially continue this upward trajectory of high lows and higher highs, taking us back towards the upper end of this channel right now. Now for platinum at the moment, we're not adding any further exposure. We're fully loaded on this market, but we do want to see whether we can get an additional acceleration as we go into next week back towards the swing highs here as well. Palladium is one we're keeping on the radar currently too. We've had the usual sell-off that you do actually get over May. So far from the highs to the lows, we broke out to all-time highs. Now we've subsequently had a 2,000 point pullback. Ideally, I would like to see a further corrected price action on palladium in order to buy back towards the end of this month, and then as we transition into June. If we get it, we may not, but that is definitely on the radar if we were to see further downside on palladium. It's a bit similar with platinum, in fact, here as well. If platinum was unable to follow through at these levels and rolled over, and we got a retest back towards the lows that were tested over March and April, this is an accumulation zone where we would be interested in adding further exposure on this market. And then, of course, going back to the energies, we remain long as well here. We've seen a nice uptick into Friday's close, so a 2% gain there. Essentially, we're still staying long our energy positions here. On our 2 combined energy positions at the moment, we're up over 5,000 points. It's been an incredible run over the last quarter here. And of course, with energies, they're currently up over 250% from last year here, and up over 50% so far in 2021. So you definitely want to make sure that you're capitalizing on the super cycle that we're we're going through at the moment. Many commodities reaching multi-year highs, and I would absolutely have silver on the radar as well, particularly as we get much closer towards the Basel III regulation, which goes into effect at the end of June. So that can have a big impact on the metals. You definitely don't want to miss out on that opportunity. This is, of course, where you want to be utilizing a research-driven approach in the market, where you're using data, market intelligence, you're utilizing statistics, have an understanding of the key major catalysts that will drive the commodity markets, so that you're not constantly FOMOing in at the top of a move or panic selling out at the lows. We're seeing it a lot right now that traders are getting chopped up in the market. They don't have enough conviction to stay in the trades that they are in, and subsequently they end up getting liquidated and not benefiting from the massive commodity cycle that we're currently transitioning through at the moment. Of course, alongside that, you want to be aware of the cycles in the market. So the daily, the weekly, the monthly, the quarterly cycles. Alongside that, understanding capital flows. Sentiment is extremely important, realizing when the market is very panicky and in extreme fear versus when the market is in FOMO territory and getting really greedy. This will help you a lot to position yourself for taking profit at the right time versus entering into the market when many retail traders are panicking out of their positions. You also need to be educated on the seasonal playbook, the key times of year where certain commodities will have the biggest moves in the market that you can benefit from. Alongside that, understand macroeconomics, intermarket correlations, key ratios in the market, and know what the hedge funds, money managers, and banks and institutions are doing. That will help you massively to get an edge. So with that, if you would like to learn the research-driven approach to the market, join our community of successful traders and join our professional mentorship program. There is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.